Hey guys, good afternoon. Happy New Year 2017. This is Carlos, CEO of GAR Capital. Thank you for joining me for this video. And just want to say again a Happy New Year and hope everyone had a great New Year's Eve, holiday, Christmas, Hanukkah, and all the like with your family. Hope it was safe. Hope everyone had a great time. So, with that being said, it's back to work. The first trading day for equities, anyways, for 2017, and definitely has been so far rose a little bit this morning, around 100 points. The Dow Jones now around 27, up 27. So, oh boy. So the name of the game today is volatility. Volatility. That's what we got. A lot of moves. We were up dollar yen up a little bit as the high of 118.60. Now trading at 117.50, about a 100 pip move. So again, guys, this is why we trade swing. Bigger, wider stop losses, wider targets. Just the fact that we don't get stopped in and stopped out every time we place a trade due to the fact that we don't want to get hit by commissions. I just want to go over one thing before we continue. I want you to take a look at this. This is a position size calculator. This is through Baby Pips. This is one of those websites I do recommend everyone to take a look at. If you want to overview anything in forex, it's a great way to start for new traders. Okay, so everyone asks me, hey, Carlos, I can't lose 100 pips. I can't lose 200 pips on a trade. Well, again, guys, it's all relative. So let's go ahead and give an example. Let's do a $5,000 account balance. And what do I always say? Risk percentage 1 to 4%. Always 1 to 2 is personal, but 4% is fine. So let's go ahead with a 2% risk. And we always put, let's say, 150 point stop loss on a euro dollar. Guys, again, it's always relative. We would only risk $100. So even if we lost 150, we only lose $100. 6,667 units, 6 micro lots. Again, guys, if you put 50,000, 2% is $1,000, right? So again, guys, it's still relative. I want you to really use these kind of calculators, these blot calculators, position size calculators. Always put 2 to 4%. An example, 4%. If you want to do back to $1,000 account balance as an example, 4%. Then you use 2,667, and if you hit 150 pip stop loss, you only lose $40 of your $1,000 balance. Guys, what I don't want to see is this. I don't want to see 25% risk on one trade, trying to go high and you lose $250 right off the rip. Guys, you do that 4 times, you're gone. No need to do that, guys. We're long-term. We're looking long-term for our trades. So always, please look at position size calculator. If you have any questions, feel free to let me know through email or through the chat room. So with that being said, let's go ahead and look at dollar yen. We're gonna look at some pairs. So on Instagram, as you saw earlier today, I went ahead and posted about how the swings in dollar yen went up from around 118.60 to now we're trading 117.46 at this current moment. You see the trend line ever since 27th of November, we have been bullish. We've hit little marks here and there, little dips. But again, guys, we're just going to play long term here. 4-hour thing, our target is still 125. If we look at a daily chart, yen last year was the big catalyst, was the big mover. But as you see, we're off the lows from the year, obviously. 117.48 is definitely a big move since the election of 102. Just stay patient, guys. That's all it's about. We're long-term traders. This is why we don't freak out over small moves like this. 100 pip moves, yes. Again, they're not small, but it's not enough to stop us out and to freak us out. 117.46, our stop loss is 116, which is a support level on a 4-hour chart. We have our trend lines. We know what we're about, what we're trying to do. So no need to freak out. Keep everything as is. Euro dollar, we also have a short position here on euro dollar. A little bit of a bounce back from the lows of around 104.85. We got it at 104.80. Now it's at 104.25. Again, you see the trend line here. Still a bearish tone here. And we're expecting it to go down 104 and hit parity. We do. Just again, long term. Guys, this trade may not trade when I close within the week, but we do have NFP this week, which is non-farm payrolls. So that's euro dollar. We're still short. We're looking at dollar Swiss franc. Again, we got some big moves again. Franc is stronger against dollar. Dollar's taking a little bit of hits here. Algorithms, the profit takers, you name it. 102.54 is where our current rate is. Right now it's trading a little sideways. I don't recommend to trade it right now as of yet. If you did want to trade it, I would want to see us break 103.20 once we break this resistance level here. If we could sustain around a 103.20, I will go ahead and trade. I would actually go long if that's the case. So if we can get to around 103.20, put a limit order in for 103.20 for the long side. Once you break that, do I believe it'll happen? Yeah, if a strong NFP and strong economic numbers, a stronger Dow Jones and S&P 500, absolutely. Dollar strength is good for everybody. So obviously some multinational corporations prefer not a strong dollar, but again, just what it is. Let's go and look at a pound dollar. Again, same thing to the downside. Right now around 102.2260, we had that big move. Again, dollar was taking a hit. Again, guys, dollar pairs is where we're bullish on at the moment. Still gonna take at US oil. US oil took a big decline. We were around 54.93, now around $2 off that number, now 52.46. We were long CAD yen, and we closed that trade out for 100 pip loss. Wanted to get out of that because, well, to be honest with you, we were at the point of 86.10. We were around 250 pips down. We actually bumped up a little bit, but we actually got out of it, which was, I believe, it was a smart move on our part. There's no need to stay in this trade. I do see a bullish trend still with oil rising against it, but with the sharp pullback, especially with more and more production from non-OPEC nations, oil has been going to the downside here. So 52.44, still long. I still like oil to the long term here around 55, 58. $58 a barrel sounds about right for the sweet spot there. 57 short term. We will get back to 55 by the end of the week. At least we should. Okay, so you know what? One more trade I want to take a look at. Dollar, Canadian dollar. Again, basically our oil trade. Trading at 134.27. Right now, I'm kind of trading sideways here. We are still bullish, but we're still looking for 35.85, which is the top here. On the daily, has it? Yeah, definitely still seeing bullish here. I'm not going to trade this. I like other dollar pairs a little more. Euro dollar, dollar yen, pound dollar. But for example here, your USD CAD, I'm not trading. I just don't see a move here where I can get in and make enough pips to make it even justify the risk. So today we had some really good numbers. We had the ISM, Manufacturing PMI, Purchasing Manager Index, beat estimates, 54.7. We had construction spending up, beat by 0.4%. ISM manufacturing prices up, beats by 10 points, by 10 basis points, 10 points, excuse me. We also have FOMC meeting minutes, which talks about the last FOMC, where we actually increased the rate 25 basis points, which was all expected in December, the December rate hike. Not much other than that, other than the construction PMI for the pound. We had some CPI numbers, inflationary data out of the European Union. And then we also have services PMI in Britain on Thursday. We have non-farm payroll employment change. This is basically our ADP, which gives us a heads up for the NFP number ahead of time. Obviously, it's not gospel, but it gives us a little bit of a hint. We also have ISM non-manufacturing PMI. We're expecting a good gain on that. And crude oil inventories, as expected, moved over 1 day due to Monday being closed for the trading days. And Friday is the big day, non-farm payroll. We have trade balance for Canada, average hourly earnings. We want to see all this employment rate as well. So as we close into the Trump transition team, January 20th is the inauguration date. We're expecting strong data with a strong NFP. I do believe that dollar yen will increase to 120, not that same week, obviously, but 120 would be not far off for the dollar yen, as, more risk taking will be out there. Equity buying, less cash position, less bonds, less long bond positions, and less precious metal positions will dump into more riskier assets or higher risk-adjusted yields, yielding investments like your dollar and Aussie dollar and et cetera, et cetera. Excuse me, the Aussie, et cetera. So again, guys, this is what we're just looking at. Again, we're heavy on dollar pairs. We know where we're standing here. All eyes are on NFP on Friday. And again, guys, long-term thinking. We're gonna stay strong, thinking as always what works for us, which is long-term, keeping the risk low, especially with these pairs. We know where dollar has been going relative to other pairs. We're staying away from any kind of exotic pairs, New Zealand or anything like that for this year. For now, no need to trade those, especially with the cost and the volatility swings. So with that being said, guys, that's all we have for this week. All eyes on NFP, ADP, crude oil inventories, and the like. So again, guys, if you have any questions, feel free to type at me at the chat room or email me directly, garcapital@gmail.com. Thank you very much for joining me today, and we'll keep our eyes on the markets, and let's have a great start to 2017, especially this week with non-farm payrolls. All right, we'll go and talk later. Have a great day, guys, and a great week.